All right. New data from Redfin is revealing the truth about the US housing market. And this is a truth that I've been telling you all for the last 3 to 4 months. And it's a truth that means we're likely to see continued weakness in the housing market through the end of 2025 and potentially lower home prices in the areas where inventory is highest. And this truth is one that you all need to pay attention to. And it's the fact that homebuyer demand is continuing to drop even after the Fed cut interest rates. Redfin is reporting that pending home sales posted their first decline in 3 months, even as mortgage rates drop. And even more concerning, Redfin's home buyer demand index is now down 14% year over year. In addition, everyone, the Wall Street Journal is reporting that home sales fell again in August, slowed by high home prices. So what we have here, folks, entering the fall is a persistently weak home buyer demand environment that is not improving due to Fed interest rate cuts. It's very important that everyone in the housing market understand that these Fed rate cuts are not going to save the day. Once again, they didn't save the day last year. Why would they save the day this year? And we're already starting to see the data show that. And so as we enter the fall and go into the winter, expect even more declines in home buyer demand. But the scary thing is, everyone, I don't think people actually realize how low this demand to buy homes is right now. Just how low is this demand? It's down 26% from pre-pandemic levels. Existing home sales, as reported by the NAR, the blue line is the pre-pandemic norm. August 2019. 5.42 million home sales. Where are we in August 2025, or where were we in August 2025? 4 million home sales, down 26% from pre-pandemic, down almost 40% from the pandemic peak. And so as you guys go out there and you submit offers on houses this fall and winter, as you start debating whether now is the time to buy, understand actually that the housing market has become a buyer's market and that you do not have much competition. In fact, we have some of the lowest demand levels that we have ever seen in US history, which is good news if you're a prospective buyer. Prices are now dropping in half of America, and in some states like Florida, prices are dropping by a lot. However, if you are looking to buy a house right now, I suspect it doesn't feel like it's a good time to buy yet. There might be more inventory. You might be noticing more listings, and you might be noticing some price cuts. However, the values are still really expensive. In fact, existing home sale prices, everyone, are still at their highest level on record. Median prices in August rose to $422,000, which was up 2% from a year ago and the highest price month ever, highest August ever. And this is being driven by the fact that nationally, values are still going up. In some cities and states, there's still an inventory shortage, right? In the Northeast, in the Midwest, there's still an inventory shortage and values are going up in those areas. And so it doesn't feel affordable to buy a home. In fact, this is one of the least affordable times to buy a home in US history. Around 40% is the mortgage payment to income ratio. And you have to wonder, just how much longer can these home prices hold on for with the demand so low, with so many people boxed out of the market, with the Fed rate cuts not doing anything to stimulate demand? Just how long can these prices hold on for? And I'm going to answer that question in this live stream. I'm actually going to take your requests in this live stream. But first, I want to show you all a story of someone who bought a house during the pandemic. Someone who bought a house during the pandemic, he actually bought it sight unseen in less than 48 hours. And now he's panic selling this house at a loss. This is a story I'm going to show you in a second. But first, I want to show you actually why so many Americans are not buying homes right now. Why so many Americans are not buying homes. And it has to actually to do with a lot of existing homeowners complaining about home ownership. According to a Bankrate survey, 45% of American homeowners have regrets about buying their current home. So almost half of existing homeowners who have already purchased have regrets about buying their home. That's an important thing to understand. If you're about to take the plunge into buying a house, understand it's a massive decision. You're going to be spending the most money likely you've ever spent in your life on buying a house. Are you going to regret it? Well, half of Americans who already bought their home do. And according to Bankrate, here's what they regret most. And it's actually not even close, everyone. The number one thing current homeowners regret, can you guess? 42% regret the maintenance and other hidden costs that are more expensive than they expected. 42% talk about maintenance and other hidden costs. 21% say they bought too small of a house. 16% say their mortgage payment's too high. 15% said they overpaid. But by and large, it's people complaining about that property tax payment, that HOA payment. Apparently, according to this survey, a typical homeowner spends over $18,000 a year on non-mortgage homeowner expenses. So if you are buying a house, everyone, don't just look at that mortgage interest and principal payment. Make sure to also look at that property tax payment, that insurance payment, and also make sure to budget for maintenance and have enough in there, especially if you're buying a resale or a used house. You have to have some cushion in there and expect that you are going to be spending some money on fixing that house up after you buy it. And I think this is one of the big things that's causing a lot of Americans to shy away from buying a house right now, is that they know that there's a lot of hidden costs. They know there's a lot of hidden fees. I think no longer do people view buying a house just as like this thing they have to do. Instead, they view it as this thing that could turn into a big liability. And what's especially shocking now is that the homeowner affordability has gotten so bad that even people making six figures can no longer afford to buy a house. Imagine that. People making six figures. Making six figures used to be, I don't know, 10 years ago, that used to be like if you made six figures, you were wealthy. You make six figures today, you make 100,000 in 2025. Yes, you're above average, but you're not necessarily going to feel like you can afford to buy a house. And there was a commenter, actually, everyone, on one of my previous videos, and I want to show you this comment because I think it really speaks to the issues in the housing market right now and why the buyer demand is so low. Why is Redfin reporting that pending sales are dropping after the Fed cut rates? Why is the Wall Street Journal reporting that we have close to the lowest August home sales on record? It's because of this comment. This commenter here on my YouTube channel makes upwards of $130,000 in Massachusetts, but can't afford the cheapest house in the worst neighborhood. She has no credit card debt, an 818 credit score, no car payment, nothing, pristine credit. Should be good to buy a house, but no, cannot afford a mortgage, property taxes, mortgage, homeowners insurance, heat, water, trash, groceries, electric, unexpected circumstances. She doesn't know how people are doing it. She doesn't know how people are affording to buy homes. Well, the interesting thing actually about it is that not many people are buying homes right now. The demand is super low. And in a state like Massachusetts, it might not feel that way because the inventory on the market is still low and prices are still going up in Massachusetts. But I put a pretty interesting chart together that I want to show you guys. And this chart helps explain what's going on in this housing market. And it shows you the states where the demand to buy homes has dropped the most versus the states where the demand to buy homes has held up the most. And I wonder if you guys can maybe guess, what are the states where the demand to buy and the home buyers have just like exited the market versus what are the states where the demand to buy is holding up? And you can see here in the bottom right, we have the states with the biggest drop in buyer demand: Hawaii, California, Massachusetts, Washington, DC, New Jersey, and Nevada is where the demand to buy has dropped more than 30% from pre-pandemic levels. So we have a big hole, a big gaping hole in home buyer demand here in these states, which is basically Northeast, West Coast. The demand is way down. Now look at the top left of this graph, everyone. Where is demand holding up? In fact, where is demand up year over year to buy? Demand is up in West Virginia. West Virginia is actually the only state where there's more home sales today than there were in 2019 before the pandemic. Additionally, demand is holding up decently in Alabama, Oklahoma, Louisiana, and Arkansas. And what does this reveal to you, everyone? What does this graph reveal to you about the housing market? Because it's actually a very important point that not many people understand. It's the x-axis here. The x-axis actually shows you how much homes cost to buy in these states. And what you can see is a very strong correlation. The more expensive a state is in terms of home price, the more that demand has dropped. The more affordable a state is in terms of home price, the more that demand has been resilient. And why this is important to understand is because it proves a couple things. First of all, right now, there's a flight to affordability. Affordability is the number one thing driving home buyer demand in this market. So while we're down 26% nationally in demand the last 6 years, some states are even, other states are down 35%. Why? It all has to do with affordability. It all has to do with home prices. Now, the other interesting thing about that graph is that it proves that mortgage rates are not what matters in this market. You know, there's still people out there who think that mortgage rates are what influences demand. And it's not what influences demand in this market. And the way we know that that's the case is because all of these states, everyone, have a similar 30-year fixed mortgage rate. The mortgage rate is roughly a national data point. The mortgage rate's a national data point, yet there's so much variation in demand just by the home price. And what this proves is that if home prices were to drop, demand were to come back in. And this is something I just hope everyone in the housing market can firmly understand, that it's prices that matter. It is not mortgage rates that matter. And we're seeing it show up in the states that are doing better on demand. These states in the top left, West Virginia, Louisiana, Oklahoma, Alabama, are doing better on home sales, doing better on buyer demand. Why? It's because you can buy a house in these states. You can buy a house in these states and you can spend less than 25% of your income on your mortgage, taxes, and insurance. The cost of buying a house in these states is less than $230,000. So that's why buyers are still buying in those states. Conversely, if you were to buy a house in Nevada, which has the biggest decline in home sales of any state, you're paying 40% of your income on your mortgage and taxes. The typical home value is $448,000. New Jersey, interestingly, has the second biggest decline in demand. California has the third biggest decline. Arizona has the fourth biggest decline. Washington has the fifth biggest decline in demand. It's all these high-priced states where the demand is down most. But of course, if you're a buyer in California, if you're a buyer in New Jersey, if you're a buyer in Massachusetts, you likely don't feel like demand is really low. You don't feel like it's the lowest home buyer demand on record. You just still go to look to buy a house in these states and the prices are really high. And even there's still bidding wars in some of these states. And ultimately this has to do with inventory, everyone. So there's a supply side to the market. There's a demand side to the market. The demand side to the market is what we've been talking about in this video so far. Demand is really low, especially in the high-priced states. But to unlock serious price declines, you need also supply. You need inventory. You need a lot of homes for sale. And that's the thing that we're still missing from some states. So if you're scratching your head and you're saying, Nick, I see the data on home sales and buyer demand, but why are prices still going up in my area? It's because there isn't enough inventory. There isn't enough supply on the market. And so we need to see the supply continue to increase before we see prices go down on a national basis. Now, we here at Reventure, we have a minus 1.5% national forecast in the next 12 months. But in certain states, we see values going down as much as 6 to 7% over the next 12 months. In other states, we think values are going to go up 6%. And in a second here, I'm going to take your requests, everyone. We're going to dig into some of this data and see what's going on here in the housing market. Let's see. What are you guys saying here in the chat? How are things going so far? Let's see. Are you guys agreeing with what I'm saying? Are you disagreeing with what I'm saying? Let's see. Truth Seeker says mortgage rates don't matter that much to me. The price matters. That's true. Frank says, I can't even imagine what Newport, Rhode Island goes for today. That's a great point. Newport, Rhode Island is like a wealthier part of New England. Crazy prices up there. We have Edward requesting I look at 74403. We'll take a look at that in a second. What else, everyone? We have International Stacker requesting I look at Key West, 33040. 33040. So let's look at Key West. Let's look at some of these markets, everyone. And I'm going to kind of go through this live stream, take your requests, and show you what's going on in your local housing market relative to both supply and demand, because both of those are important. We're looking at the data here on Reventure app, and we're starting in Key West, everyone. What's going on in Key West? Now, for those of you that don't know, Key West is all the way here on the bottom of Florida. I mean, this might be the southernmost part of the United States, actually, here in Key West. What is going on with home prices in Key West? Well, they're actually down 6% year over year. Home values here are going down. They went down from 1.01 million to 957,000 over the last 12 months. They're also going down on the eastern side of Key West. The question is, what is our price forecast? Our price forecast is actually stable, though. So this is interesting. There's already been a decline in Key West, but we have a stable forecast over the next year, likely due to the fact that inventory is still at a lower level. So let's take a look at inventory in Key West. You can see actually inventory in Key West has dropped year over year. There was 282 homes for sale last year. Now it's down to 257, which is why our forecast is indicating stable prices in Key West. How about some other markets that you guys want me to take a look at? I'm getting a request from Nikita, who's requesting 98604. 98604. Where would that be, Nikita? When you guys do 98604, and when you do the request, everyone, just shout out also what the city is, city and state, so I can recognize it right away. 98604. This is in Washington. Now, again, folks, Washington, north of Portland. This is an area where the demand is down. Let's check the home sales data from Redfin. We have that home sales data here on Reventure app. How are the sales looking? Well, the sales dropped a lot. The buyer demand dropped a lot. It's rebounding a little bit, but it's still well below pre-pandemic levels. Meanwhile, inventory here north of Portland in Washington State is 176 homes. So we went from 119 to 176 homes. That's that supply I was telling you about a second ago, everyone. So to see actual real price declines, right, in your market, you're going to want to see not just the demand go down, you're going to want to see the supply go up. And we're forecasting minus 3.9% for this area north of Portland in Washington State based on that. How about 32703, Apopka, Florida? 32703. Apopka is in Miami, everyone. Now, this is an area, sorry, not Miami, Orlando. I apologize. It's in Orlando. North of Orlando, Apopka, Florida. So 37203. Home value growth in the last year is minus 4.6%. Minus 4.6% in the last 12 months. So this market's correcting. Pretty much everywhere in Orlando is correcting. And I don't know if you guys have been to Orlando recently. I don't know if you guys are fans of Disney. If any of you maybe are Disney adults. I hope you guys aren't actually Disney adults. But values are pretty much going down everywhere in the Orlando metro, down to Kissimmee. They're down 4.6% here in Apopka. We think the price forecast in the next 12 months is minus 7%. We're forecasting a minus 7% drop in the next 12 months. Why are we forecasting that drop? Let's take a look at home sales real quick since we're talking about buyer demand. Oh, interesting. Now, this is not what you would have expected, everyone. The buyer demand here plummeted and has now gone back up. So we have 85 home sales in August. That's actually close to what it was before the pandemic and at the pandemic peak. However, you got to compare the demand to the inventory. Inventory has gone up even more. So now we have 176 homes for sale. Lots of inventory, lots of DOM, lots of price cuts. So values are already down 4.6%. We forecast are going to go down another 7% in the next 12 months. How about, oh, this is an interesting one, guys. Oshkosh, Wisconsin. Oshkosh, Wisconsin. I think there's like a joke about Oshkosh, isn't there? Like go to Oshkosh, something like that. 54901. What's going on in Oshkosh, Wisconsin? I actually really appreciate the diversity of areas that we're looking at. Now, this is, where is Oshkosh? So this is up there. This is basically north of Milwaukee into the inner regions of Wisconsin here on the Lake Winnebago, is it? Let's see what's going on here. Home prices in Oshkosh, Wisconsin, up 5.4% in the last 12 months. Up 5.4% in the last 12 months. This is an area that's still going up. There's still an inventory shortage here. Where do we think prices are going in the next 12 months? We also think they're going to continue to go up. 4.3%. We call that technically prices stable, but prices going up 4.3%. In some of these areas, we think they're going to go up 6.8%. So, why are we forecasting that, folks? Oshkosh. Why do we think Oshkosh is going to go up 6%? It has to do, folks, with inventory. So if we look at the amount of homes for sale, oh boy, pretty low, everyone. We used to be at 839, 400. We're only at 237. Meanwhile, the days on market here in Oshkosh is only 36 days. It was 50 days before the pandemic. So that indicates a tight market. And if you guys ever kind of want to conduct this analysis yourself, you can do that on Reventure app at www.reventure.app or by downloading the Reventure mobile app on the iOS and Android app stores. We're now in the mobile app stores. You're going to want to look at the inventory, the DOM, the home sales, and the price cuts. Those metrics tell you everything you need to know about what's going on in your market. And you can really figure out where the market's heading in the future and then also unlock our price forecast score. And I'm going to get into more of your requests in a second. But first, I wanted to get back to that story I was telling you guys about before. This home buyer who panic bought a house during the pandemic and is now forced to sell. The Wall Street Journal just did an article on this, and I think it's really interesting. It's kind of a warning if you're a home buyer, right? Again, why is demand so low? Why do half of homeowners regret their purchase? Well, according to this article, FOMO made him buy a house in 48 hours. Now he's struggling to sell. This home buyer raced to lock in a low interest rate, but now wishes he was a renter. And you scroll down here, and it talks about this man who bought a home in Atlanta and went under contract to buy it in the spring of 2022. Now, he bought the house for $399,000. And it's been on the market for now a year. So he bought it for $399,000 in 2022, and now he's relisted it. He originally had it at $430,000. He's cut it to $387,000. So he's now cut it below what he bought it for in 2022. It's still sitting on the market. And this article is really interesting, everyone. It goes into like why he rushed to buy the house. And let me know if you guys remember this period during the pandemic, right? Like many of his friends were buying at the time. And after sharing an apartment with a roommate, he liked the idea of having a place to himself. The home had a kitchen, granite countertops. And he was like, oh my gosh, maybe I should do it. Atlanta was a big boom town, so he's like, okay, I'll take the plunge. But now the Atlanta market's cooling off. And a lot of people who bought these houses, they're finding that like the rigors of home ownership are not what they expected. It costs them about $3,000 a month to maintain the house, including mortgage, insurance, utilities, and lawn care. By comparison, he was paying $1,200 a month in rent. So his payment has doubled. His payment has doubled. And then after 2 years after he bought it, he started smelling sewage, which isn't good. He had to spend $13,000 to fix that. Now he's like, I'm done with that. I'm going to rent an apartment with a friend as soon as I can and sell the house. And he's out. And I think we're seeing just a lot of that, everyone. People who took the plunge during the pandemic. Some of these people locked in a low mortgage rate. Some of these people have a 3 or 4% mortgage rate, but they're still trying to sell their house because even though they have a 3 or 4% mortgage rate in some cases, the payments are still really high due to the taxes and insurance. That person in Atlanta was paying $3,000 a month all in. You can rent in Atlanta for way less than that. And I think that's one of the reasons why we're seeing the demand low. That's why we're seeing the inventory go up, especially in the South. We're seeing the home prices now drop in the South as well. Let's see, what other requests? Are you guys looking to buy right now? What do you guys think about, the people who bought during the pandemic and maybe are looking to sell right now? I was warning a lot of you out there, 2021, 2022, be careful buying. The market's going to flip. We're seeing that's now playing out in a lot of different states, a lot of different parts of the U.S. Home values are dropping in roughly half the states in the U.S. right now, month over month. But we have a request, everyone. Round Rock, Texas, 78681. Round Rock, Texas. Now, Round Rock is a city that I used to live close to. So I used to live in Austin. Round Rock is a suburb to the north of Austin. Round Rock is to the north of Austin. So if we look here on Reventure app, you can see here downtown Austin. Round Rock is about 20 minutes to the north. It's a nice suburb. It's kind of got this Texas feel. Actually, the first time I got COVID, I was actually in Round Rock, 2021. I remember going to a bar with my friends. Got COVID like 2 days later. So yeah, Round Rock's a nice place, pretty good schools. A lot of people, moved here during the pandemic, but this is a market that's correcting. Down 6.6% the last 12 months in Round Rock. Down 6.6% the last 12 months. Where are prices going the next 12 months? Oh my gosh, we have a minus 10% projection the next 12 months. So for the person who's looking to buy in Round Rock, this is great news for you. This minus 10% projection, the fact that values are already down 7%. In fact, folks, in Round Rock, values are down 24% the last 3 years. My gosh. Look at this. You know, there's people telling you out there, oh, prices aren't dropping. That's a lie. Prices are dropping in a lot of different areas. Look at this decline in Round Rock. Prices have just fallen off the table the last 3 years. 24% correction already. I mean, folks, that's a crash. We think there's going to be another 10%. Why do we think there's going to be another 10% in Round Rock? And how can you use this data to negotiate a better purchase price? Well, we went from 150 homes on the market to 209 homes on the market year to year. So inventory is up. At the same time, DOM is through the roof. 61 days on the market. Long-term average for August is 40 days on the market. So when you see those stats, everyone, when you see stats like that in your area, and at the end of this video, go to ReVenture type in your zip code, see what it looks like for your area. When you see the inventory up, when you see the DOM up, that's telling you declines are coming. And that's so important to understand, because I still see so many narratives floating around about like, oh, prices are going to go up. I still see people saying that, even in markets like Austin. It's like, are you crazy? But to actually ground yourself in the reality, look at the data for your zip code. That is just so helpful if you're a home buyer who's trying to make a more educated decision. If you're a home buyer who's on the fence about buying, where's the market going to go? Look at that data on inventory, DOM, price cuts, home sales in your zip code. Look at the price forecast in your zip code. Those data points will go a long way in anchoring you in the proper expectations on where the market is heading. And you can even use that forecast, like in Round Rock, minus 10%. Download the market report on ReVenture app, share it with the listing agent on houses you're interested in, share it with the sellers, and try to negotiate a cheaper price. All right, everyone. What other markets? Ooh, this is an interesting one. I think we might see a similar situation in this next market. Take a look at this, everyone. The next request here is coming from John, Pueblo, Colorado, 81005. So Pueblo, Colorado is southern Colorado. Pueblo, Colorado is actually not too far from Texas. If you scroll up here on ReVenture app here, where is Pueblo? There it is. Not too far from Texas. I guess it's closer to New Mexico. It's basically Denver, Colorado Springs, Pueblo in Colorado. What are the prices in the last year? Well, Pueblo is down 0.5% the last year. So Pueblo is starting to go down. But what's it going to do the next 12 months? That's the big question. Oh my goodness. Minus 8.7% is our 12-month forecast for Pueblo. Minus 8.7%. We're going to get to that zip code, John. 81005, because this data can vary by zip code. So let's see by zip code. 81005. Minus 1% the last year. Minus 9.2% the next 12 months. Why are we forecasting that? Well, folks, this is an inventory game here. Take a look at this. We went from 119 homes for sale last year to 175 homes for sale this year. The inventory just keeps stacking up, and the days on market, folks, what I'm about to show you is going to scare you. It's going to shock you, the days on market here in Pueblo, Colorado. We were a long-term average of 40 days that houses were sitting on the market. Now we're 69. So these sellers, their houses are sitting 69 days, John. So when you go to buy, understand that the market's tilting in your favor. There's record inventory. There's record DOM. Prices are already starting to drop a little bit year over year. But in the next 12 months, we have a minus 9.2% forecast. I feel pretty confident that you should be able to negotiate a deal in this market. What else, everyone? 84117. Where is 84117? Again, folks, I would ask that you please, after the zip code, you just leave the city as well. Holiday, Utah. Holiday, Utah. Now, Holiday, Utah is to the south of Salt Lake City. So we went from Colorado to Salt Lake City. Salt Lake City is a market that has a lot of inventory. Prices here have been kind of holding, right? So in Holiday here to the south, prices are up 2.6% year over year. The question is, where are we going to go into the future? Where are we going to go into the future? Well, we have a minus 0.6% forecast in the next 12 months. So that's basically kind of stable prices, everyone. Maybe prices go down a little bit here, minus 0.6%. And just why is that? Why are we not forecasting a decline here in Holiday, Utah? Well, it's inventory. We're at 72 homes last year. Now we're at 68 homes. So the inventory actually dropped year over year. The inventory dropped, and then the days on market, it's up, but it's not crazy. What else are you guys saying here in the chat? JK has an interesting comment. He says, what do you say to the people on RE Bubble sub who laugh at these videos? People don't understand fear sells. This dude literally This dude does this literally for views to leech off their hopes of a crash. Oh, interesting. So yeah, I guess there's some people out there that try to claim that I'm just doing this to scare people. So let's just stop right there with that comment, everyone. If someone's claiming I'm making these videos to scare people, they first of all just have it all wrong to begin with, because the message I preach in these videos and the data I'm showing you is actually hopeful. It's actually good news. We're talking about inventory going up, prices dropping in a lot of cities in the US. This is great news if you're a home buyer. Prices crashed already in Austin, Texas. That's tremendous news. The only people who would think that this message or this video or videos like this is fear are those who are in the real estate industry, realtors, mortgage brokers, and investors who are losing money or not making money. They would be scared by the prospect of home prices declining. So if you ever see anyone say these videos are about fear, understand they're likely coming at it from the perspective of being in the real estate industry and, being in a narrative, in a delusion that doesn't permit talking about home values declining. So that's the first thing. Second thing, this dude does this literally for views and to leech off their hopes. So, folks, I'm presenting like pretty hardcore data in videos like this. I'm showing you down to the zip code what inventory and home sales are looking like. And in many markets, I'm showing you prices are actually going up or are forecast to go up, depending on where it's going. And ultimately, my forecasts at this point are a formula coming from Reventure app. They're not me really kind of shooting from the hip or anything. And so I do think that's interesting. I occasionally see some of these people who try to kind of rag on me or rag on this channel. But ultimately, the Reventure brand just keeps growing bigger and bigger. The amount of users we now have on Reventure app is almost 200,000 users on Reventure app who have signed up for a free account. Well over 1 million unique users have gone to Reventure app. So I just kind of laugh at the people at this point who kind of try to still paint me or this channel as being like a crash bro or whatever. It's just like, guys, like, come on. All right. What else? What other requests do you guys have? What other requests do you guys have? How about, I know we got some super chats in there. Let's see. What else do we get? What else do we get? Oh, actually, folks, before we do more requests, I want to show you something. This was an interesting news article from CNBC. And why I'm showing you this news article is because I want to link something to you. The rental market and the for sale market. Where's the for sale market going to go? We can look at inventory, we can look at all that. But let's also look at the rental market. According to CNBC, single family rent growth is starting to show new weakness. So this was an article by Diana Olick on CNBC. It just came out a couple days ago. Single family rent prices increased just 2.3% in July from the same month last year. Rent growth has now fallen below the lower end of the 10-year average range for pre-pandemic growth. And in some markets, single-family rent growth, everyone, is going down. So single-family rent growth actually is going up in Chicago. Chicago stands out as an exception. Rents in Chicago are going up. Chicago has the highest rent growth, followed by New York, Philly, and DC. Those have the highest rent growth. So it's interesting. Those markets also have tight for-sale inventory. They also have the highest rent growth. Not an accident. I think there are some people moving back to the legacy housing markets, right? Now, Dallas and Miami were the lowest of the top 10. Miami saw no rent growth at all. So I think it's interesting to see how the rental market is continuing to slow. And if we look at big landlords like Invitation Homes, right? Invitation Homes is a big landlord. They're one of the biggest homeowners in the US. What's going on with Invitation Homes? Their stock price is down 17% the last year. Invitation Homes' stock price, they own 85,000 homes. Why is Invitation Homes' stock price down 17%? Why is the single family rental market experiencing weakness? Ultimately, why I'm harping on this for you guys is to establish a connection between the rental market and the for sale market. They're kind of two sides of the same coin. And if we're seeing rent growth slow or go negative in markets like Dallas or close to negative in markets like Miami, that's another signal to you that the single family for sale market will also continue to slow. Because if people's rents don't grow or go down, there will be very little incentive for first-time buyers to jump into the market. It will be very easy for people to say to themselves, hey, let's just wait. Let's just wait it out. I know a lot of you guys out there are waiting it out. Here in Nashville where I am, it's about 40, 50% cheaper to rent than it is to buy. So if that's the case, why would you buy? Why would you rush into buying short of having a family situation where you have to? And so that slowing rent growth, it's just another cue, right, of where the housing market is heading into the future, and that there will be no imminent rebound in home price growth. There will be no imminent rebound, and that these people who talk about like inflation, there's someone actually who left a comment that I want to show you guys right now. It's actually a really good comment. He's saying that, well, maybe the housing market's going to go up in the future. And I kind of want to explain this to you. He's saying, I would ask Nick that you consider the prices of houses for your application and compare it to, say, as a benchmark against the price of gold. It is hard to understand prices without inflationary context. Inflation, as reported, the government measures the value of things, not just relative to each other. It is hard to understand the current state of things without understanding the basis for comparison. I know we are waiting for a massive drop in pricing, but perhaps a better way to think about it is to think about housing as a comparison to assets that cannot be readily diluted, aka paper money, and what is really actually happening to their intrinsic value. This comparison might answer a lot of questions on why housing might continue to go up while the economy is contracting. And the overall argument here is he's saying, oh, well, there's been inflation in gold, there's inflation in Bitcoin, and that other people fear the US dollar is going to kind of crash or whatever. And if that happens, home prices are going to go up, is the idea. However, folks, the only thing that matters for home prices, the only thing that matters for home prices is rent and income. That's it. Rent and income over the last 100 years is what determines where home prices go. And to the extent inflation becomes a problem, which it could, I'm not saying it can't happen, but to the extent inflation becomes a problem again, like a big problem, not just a 3% per year inflation, but a 15% per year inflation or a 10% year inflation, we would see it in rent and income. That's where we would see it. So watch rent, watch income. If you're someone who's worried about like, oh, we're going to have this inflationary spiral, the value of the dollar is crashing, look at rent and income. Rent and income slowing is not a signal that we're about to enter an inflationary spiral. Rent and income slowing is a signal that the housing market is likely to have continued weakness and that home prices are more likely to drop. All right, what else do we got, everyone? Got some more requests, actually. 78730 in Austin, condo pricing. Interesting. Are you guys interested in buying condos? Buying a condo is really like kind of an interesting one because it's like you're basically buying an apartment. Why would you buy a condo versus rent an apartment? I don't know. Me personally, I'm probably not like going to buy a condo anytime soon. But in 78730 in Austin, maybe this person is. Let's take a look at what's going on with values. Values here are down 5.2% over the last year. Now, this is a really expensive market, everyone. 1.1 million. 1.1 million to buy a house. Whew. Over the last 3 years, it's gone down 20%. So there's already been a hard correction. What are we thinking for the next 12 months? Minus 5.7% over the next 12 months. So we've already gone down 20% in this zip code, minus 5.7. However, take note of this. Take note of this, everyone. A year ago, our home price forecast score in this zip code was a 30. Now it's a 33. It's actually gone up. It's still in contraction territory, but the home price forecast has improved. So this market might have found a bottom. Might have found a bottom in just terms of how bad it's going to get. Might be starting to improve. So just look out for that. See if that's going to happen in your market. What else, everyone? Oh, okay, we got another comment here. JK says, what do you say to people who claim basing Reventure app data on Zillow estimate isn't reliable, especially since Zillow dropped its iBuyer business due to pricing inaccuracies? So this is a good question. So for those of you that don't know, on Reventure app, the source of the data for home values is Zillow. So Zillow provides great data on home values down to the zip code level. Interestingly, though, folks, our forecast is primarily based on data from Realtor.com. Three of the five inputs on our forecast actually come from Realtor.com data on inventory, DOM, and price cuts. So actually, most of our forecast does not come from Zillow, but I will actually defend Zillow's estimate here for a second, because I think it's important you guys actually understand, what Zillow does with this estimate and why it's actually a very useful tool. And Zillow actually breaks out here for you on a website here their error rate on their Zestimate in different markets, how often they get within 5% of the sales price, 10% of the sales price, 20% of the sales price. And by and large, folks, Zillow's estimate is very accurate. It has a median error rate of 7% for off-market homes. For on-market homes, the error rate is only 2%. So the Zillow's estimate, as much as people like to rag on it, especially realtors hate it, because basically, Zillow basically reduces the relevance that a lot of realtors have. A lot of realtors don't like that, people can go on Zillow and get an idea of what their home is worth. The reality is this estimate is a pretty good gauge. Now, I will say this. Sometimes on an individual house, a estimate can be off, right? Because that house might have like something different about it. Maybe there was a huge renovation. Maybe it's a bigger lot size. Maybe it's next to like a busy intersection and it should be worth less. On an individual house basis, it's not perfect. But when you go to a zip code, a county, a metro, or a state and increase the sample size, it becomes a very reliable and is, in my opinion, the best indication of home values out there. So that's my answer to that question. All right, everyone. What else do we got in terms of requests? All right. Huntley, Illinois, 60142. Huntley, Illinois. Now, Illinois is an interesting housing market, everyone. But if we zoom out here at the state map on Reventure app, we could see in Illinois that values are still up year over year. Illinois, plus 3.5% year over year in values in Illinois. Comparatively, in Florida, we're down 5.1%. Why is Florida going down, but Illinois is going up? It has to do with inventory. So Illinois, the inventory is down about 65% from pre-pandemic norms. Look at how low that inventory is. I mean, that is crazy. Inventory is still in a massive shortage in Illinois. So in that situation, you're going to see continued home price growth. Now in Huntley, which is a suburb to the west of Chicago, we got the Chicago Metro here, folks. It's a big one. In Huntley, values are up 3.7%. Values are up 3.7% in Huntley year over year. So they're still going up. Where do we think they're going to go in the next 12 months? We think they're going to go up 4.5% in the next 12 months in Huntley. So, this is yet another example of a market, Illinois, Chicago Metro, Chicago suburbs, where there's still a shortage of inventory. We're even forecasting some of these markets to go up 10% the next 12 months here in Chicago. So that would mean, like, if you're waiting to buy in this market here, it's not such a good idea to wait to buy in the short term, because values a year from now will likely be higher than they are today. Huntley, Illinois. All right, what else do we got? 33837 bought a new, Joshua, this is an interesting comment, bought a new construction here 3 weeks ago. The builder bought down the rate to 4.25%. and also got them to take off $15,000 off the top. This was after the builder dropped $70,000 across all models. So yeah, folks, the builders are just slashing prices in states like Florida and Texas. Boy, the builders are doing some big price cuts. You could even argue in states like Florida and Texas, the builder prices net of incentives are probably back to pre-pandemic levels at this point. So you can get some good deals. But let's see, 33837, did Joshua buy at the right time? Or are values still going to drop in Davenport, Florida? Now, Davenport, everyone, Davenport is a market which is basically south of Orlando. I filmed a video once in Davenport about a year ago in a home builder site. So they have a lot of home builders here. In the last 12 months, values are down 4.5% in Davenport. We think in the next 12 months that they're going to drop another 8.8%. So Joshua, you might expect to see some value declines continue in the market. It sounds like you got a 4.25% mortgage rate, so I doubt it's going to bother you too much. But values are going to continue likely to drop in this area according to the data on Reventure app. And the reason why, let's just take a look at the inventory. 685 homes for sale. Oh my goodness, that's almost double the long-term average. When you see inventory almost double the long-term average, that's telling you prices are dropping, folks. Lots of supply on the market. Let's see, everyone. What other requests do we have? What are the requests? We got a big super chat here from Denny, selling single-family home in Niceville, Florida, 32578. So we got a seller here, everyone. I think a lot of you watching are buyers, but we got a seller who wants to know the analysis on the zip code they're about to sell in. Well, Denny, I'm about to give it to you. I'm also curious, Denny, what's your perspective on the market, just qualitatively? But I'll tell you, 32578, Niceville, Florida. If you are selling in this market, how should you approach it? And I think this is an interesting thing to think about, right? How this data could be helpful for you as a seller as well. There's one thing you don't want to do, especially if you're in a down market. You don't want to overprice your home in a down market. And in Niceville, values are down 2.3% year over year. Now, and this is the Panhandle, folks. So this is Crestview, Fort Walton Beach area. Values are down 2.3% year over year. We think they're going to go down 6% over the next 12 months. So you can see the values have already started to correct a little bit, not by too much, but we think it's going to go down 6% the next 12 months. The inventory is highest level in a decade, Denny. So if you're listing, you have the most competition you've had in a decade. The days on market, highest in a decade, 71 days on market compared to 45 days on average. That's telling you, okay, a lot of competition, that competition sitting on the market. Let's check home sales. How's the demand doing? Demand is down. Demand is at the lowest level basically since 2014. So I think that combination of factors, Denny, suggests, and to be clear, I can't really give you certified financial advice here, but suggests that you would want to be a bit more cautious, right? You are listing your home, you know it's a down market, find a good realtor in the area and, talk about like, maybe we should price ahead of the market. How desperately do you want to sell your home? Do you want to sell your home within a month? You might have to cut the price by even more than you think to sell in a month. But ultimately, that's a down market. We think prices are going to drop 6% in the next 12 months. All right, everyone. What other requests do we have here? What other requests? They're coming in hot and heavy. These requests are coming in hot and heavy here in the super chat. 77062 Clear Lake, Texas, 12-month forecast. Currently closing on a home and have seen value of Zillow continue to drop. Thinking of terminating the contract. All right, folks. So we got some people who are under contract here. They're looking at the Zestimate drop and they're wondering whether they should back out. So this is a high leverage situation. This is a situation where you're going to want data on your side. 77062. What is going on in 77062? So this is Houston Metro, and this is the southeast suburbs of Houston. Now, one thing to understand is Houston's a very bifurcated market. On the east and southeast side of Houston, values are already dropping a lot. It's a sea of blue. In some of these markets on the east side of Houston, values are down 10%, 16%, 10% year over year. Now, there's some other areas of Houston where values are still going up, these areas in red. So totally depends on where you are in Houston. Now, where was this request again? This request was in Clear Lake, 77062. So let's see where Clear Lake is. 77062. Here we go. So in Clear Lake, the values are down 3.7% already in the last 12 months. So that's kind of, you're seeing this estimate drop. That's why values are already down. Where do we think they're going to go in the next 12 months? We think they're going to drop 4.8%. We think they're going to drop 4.8%. So we're anticipating a further correction. We don't think this is going to be a major crash, though. This is not a 10% forecast for a drop. This is a 4.8% forecast for a drop. Another interesting thing about your zip code is that actually only really twice in the last 25 years have home values gone into major negative territory. This year and then in 2011, they'll likely be in negative territory next year as well. But this appears to be a somewhat stable housing market in the long run. Let's see. Did it crash in the last downturn? It only went down 3% in the 07 to 2012 housing crash. Values here are flat in the last 3 years. And the median household income is 111,000 higher income area. Ultimately, I also can't give you definitive advice, just to be clear, on terminating a contract. But if it were me, I would look at that area and feel confident that it's an area that's more stable, given the fact it didn't crash from 07 to 2012, given the fact it's only had 2 years in the last 25 years where values have gone down. However, do anticipate that if you buy today, values could go down another 4 or 5% over the next 12 months. So that's definitely something to consider when you're buying the house. All right, everyone. What other requests do we have here? I've covered a lot in this video. I think one thing I want to do real quick is just talk about mortgage rates. I want to talk about mortgage rates a little bit. And I want to talk about when I think it's going to be a good time to buy in certain areas. When do I think it's going to be a good time to buy? When should you guys get ready to purchase? I think it really depends on your market, everyone. It really depends on your market. If we zoom out here on the state map on Reventure app, year over year, we have values officially going down in 14, 15 states, according to data from Zillow. Additionally, year over year, home sales are down, according to Redfin, in about half the states year over year. And in many of these states, sales are down 30, 35% from normal. In Florida, sales are down 8% from a year ago. In Wyoming and Colorado, they're down 8%. In Nevada, they're down 12%. Down 12% in Nevada for home buyer demand. Nevada is like the worst state for home buyer demand right now. Interestingly, I talked in my last live stream about how Nevada kind of sometimes serves as a leading indicator of where the economy is heading nationally. Pay attention to the fact that in Nevada, the market is starting to drop. But if we just take a quick look at where home values are dropping the most. So we got values down in Florida 5.1% year over year. We have values down in Arizona 3.1%. We have values down in Colorado 2%. Even in California, values are now dropping 1.6%. In Tennessee, they're actually even starting to go down now, just a little bit year over year. In North Carolina and South Carolina, they're starting to go down year over year. So we're seeing kind of like this pocket of weakness on prices. Southeast, Texas, part of the mountain states, as well as the Pacific, is seeing weakness on prices. Hawaii is also seeing weakness on prices. And then we're seeing, interestingly, weakness on prices in Vermont. This is like an interesting one. But the Midwest and Northeast, everyone, like, it's maybe some bad news if you're a potential buyer in some of these states, but I still think we're going to see appreciation in some of these Northeast and Midwest states because we still have an inventory shortage. New York has a 19% inventory deficit. Illinois has a 35% inventory deficit. West Virginia has a 13% inventory deficit. Wisconsin has a 16% inventory deficit. Connecticut has a 44% inventory deficit. So I think we're going to continue to see upward price pressure here. And I think we're going to continue to see downward price pressure in these states in red. Tennessee now actually has the biggest inventory surplus of any state in the U.S. Tennessee is 53% oversupplied compared to the long-term norms. Don't be surprised in Tennessee if prices really start to drop. So, I think this bifurcated market is going to continue over the next 6 months. We'll have to see what happens in 2026. Maybe we'll see these declines start to spread. We have some more requests here in the super chat, everyone. St. George, Utah. St. George, Utah. I actually got a request from St. George in a previous live stream. Love when you guys from Utah chime in. Interestingly, I've been to St. George, Utah. I probably shouldn't talk about what happened in St. George, Utah, but I will talk about what happened in St. George, Utah. I went there in 2018, and I went with some friends from Europe, and we rented jet skis, and we actually crashed the jet skis. Not bad, but like there was damage on all 3 jet skis. And the jet ski person, which I think they might have been actually in Hurricane, not St. George, they tried to shake us down for like $13,000 on the damage to the jet skis. And I remember that was like one of my first lessons in like getting shaken down by someone. And I was like, wow, this person really is like taking us for a ride. In the end, we ended up paying them $3 or $4 grand. But lesson learned. All right. So St. George, Utah, what is the outlook here? Beautiful part of the country. Prices are basically flat year over year, plus 0.4% year over year. Where are they going to go the next 12 months? Well, we have a forecast that is trending down. Minus 6.6% forecast over the next 12 months. You can see prices the last 3 years, they went down 5% in 2023. They've basically been flat the last 2 years. Why do we think prices are going to drop in the next 12 months? Well, it's this inventory, everyone. We went from 1,400 homes to 1,800 homes in St. George, Utah year over year. So the inventory is going up a lot. The DOM is going up. Let's just check in on the home sales, that buyer demand. How's the buyer demand from Redfin doing? Now, this is interesting. This is kind of counterintuitive to the other markets. Demand in St. George, Utah is actually up at a record. So the inventory is way up, the DOM is way up, but there's home sales still transacting. So this is kind of a unique market, but I think given how much inventory there is and where the DOM is, we are going to see prices drop by about 6% in the next 12 months in St. George, Utah, which is in southern Utah. We have a request from Alex. 63051. What are your thoughts on land values in 63051? Well, it's very important to think about land values, everyone, because ultimately land values are what determines like values moving in the short term. So like when a house goes up or down in value in a year or two, it's the value of the land going up or down. It's not the value of the structure usually in that short span of time. Now, this market here is southwest of St. Louis. Again, we talked about this last live stream. St. Louis downtown is getting crushed. East St. Louis is getting crushed year over year. Value's already going down. But here in the southeast, the prices are still going up. We actually have some really nice suburbs outside of St. Louis, everyone. And in this case, what's our forecast for 12 months? 5%. So when we have 5% positive price forecast in the next 12 months, that is for single family houses and condos. But you could think of that as saying land values are going up by more than that, right? Because if you consider the value of a house as say 300 grand or 400 grand, maybe it's like 250 structure, 150 land. So if the whole thing goes up 5%, 400, let's say, to 430,000, that means the land value is actually going to go up disproportionately, and the land value might actually go up 20%. So that's the way to think about it, Alex. If you're thinking about land values in specifically, a 5% appreciation rate in a year on a single family house means that the land values actually went up by more. You do need to include some inflation on cost of construction there. So maybe it's 1 or 2% cost of construction inflation in this market, 3%, and that's going to be something like 10 to 15% inflation on land values. All right. Because I know some of you out there, you're looking to build, right? You're looking to build a house. You're not necessarily just looking to buy a house. All right. Freeport, Florida, 32439. 32439. And if I missed any of your super chats, everyone, first of all, I apologize. I'm trying to keep up with it. But email our help desk on Reventure app. That's helpdesk@reventure.app. If I missed your super chat, email our help desk and we'll try to get you an answer. Freeport, Florida. This is also in the Crestview area, Crestview, Fort Walton Beach. Values here are down 2.1% in the last 12 months. Down 2.1% in the last 12 months. We think in the future, though, they're going to drop 8.1% based on the data here. We're crunching the data at Reventure app on the inventory, the price cuts, the DOM. We're crunching the data, and ultimately, this is an inventory story. Inventory is up. Days on market's up. I mean, folks, inventory. Look at the graph on sellers versus buyers market. Everyone, we were at 49. Average is 50, right? So if we're above 50, we're a seller's market. We're below 50, we're a buyer's market. We're now at a 28 out of 100. Heavy buyer's market. Inventory through the roof, 240 homes for sale. I'd be curious, is this another market where the home sales are holding up? Yeah, kind of. Home sales are stable the last 5 years, but the inventory is just way, way up. Oh, we got another interesting one, everyone, here in the chat. 77354, listing new construction, 509 to 425. Wow. So I assume that means you're putting it under contract at a discount of around $80,000. The new construction is really going down. Closing costs covered, 500 million, central markets we built, growth area looks promising. Curious what you think. Magnolia, Texas. Where is Magnolia, Texas? And is that near where Magnolia is for Chip and Joanna Gaines? I'm curious. Magnolia, Texas, 77354. 77354. We're getting a geography lesson every single video, everyone. So this is not Chip and Joanna Gaines territory. Chip and Joanna Gaines are up in Waco, Texas. This is to the northwest of Houston near the Woodlands. All right, so this is like an area, like decent economy up here, but let's see, what's going on with prices up here? Well, interestingly, values here are flat year over year. So if you're getting an $80,000 discount on list price, that is probably a good deal. Because values are flat year over year across the zip code in general. We think they're going to go down 3.7% the next 12 months. And by the way, this is a zip code that the biggest annual drop that we've seen in Magnolia, Texas in the last 25 years is only 1.8%. Literally, that's the biggest drop in the last 25 years is 1.8%. So I would actually feel pretty confident buying in a zip code like this. It might be a bit overvalued, 14% overvalued, but if you're getting an $80,000 discount, I actually feel pretty confident about buying the zip code given its stability. We only think there's going to be a 4% decline in the next 12 months. And then you can access our 12-month forecast, folks, by going to www.reventure.app. Head there right now, everyone, or download the mobile app. You actually see here on the front page, everyone, we have options to download the mobile app in the App Store and on Google Play. The mobile app actually is my favorite way to use the application, everyone. I use it on my phone all the time. But you're just going to want to type in your zip code either way if you go to the website or if you go to the mobile app. And then what you're going to want to do is access our 12-month price forecast. Access our 12-month price forecast. You can do it by opening any scorecard for any city or zip code and then just unlocking that price forecast by signing up for a premium plan. The cost is $49 a month, which is ultimately a very affordable price to the cost of buying a house in some of these markets. And this forecast is going to give you peace of mind about where values are heading in the future. You can see where I used to live in St. Pete. We think values are going to drop 5.3% the next 12 months. There's other areas in the US where we think values are going to go up over the next year. So head to www.reventure.app, download the Reventure mobile app in the app stores. If you want to perform the analysis I did in this video, you want to gain peace of mind as a home buyer investor agent out there, go to www.reventure.app, sign up for that premium plan. Until next time, this is Nick from Reventure signing off.